This is Matthew Kratter's Bitcoin University. Today I want to talk about Bitcoin, precious metals, and monetary premiums. And this video was inspired by a comment by Gwyn Ned1, the next better Bitcoin as a metal analogy. When it comes to physical metals, platinum is better than gold. Gold is an old and backward metal based on old technology. I'm not sure what that old technology is. I think it's just based on atoms, just like platinum. But let's proceed with a comment. Gold is an old and backward metal based on old technology, while platinum is space age. It's more scarce than gold. It's more durable at high purity, where gold needs alloys like crown gold. In a fire, platinum's high melting point is much more likely to stay intact. Its density is also more unique, and it's harder to fake with similar dimensions than gold, which can fall prey to tungsten fakes. When the next better chain comes along, the same thing will happen to Bitcoin as platinum has done to gold. So the basic analogy here is that Bitcoin's going to be replaced by another newer crypto in the same way that gold has been made obsolete by a more desired, more modern metal. But is this even true? If you take a look at the market cap of platinum, it's a mere 255 billion, while gold's market cap is over 17 trillion, really almost 18 trillion at this point. So it's hard to say that somehow platinum has replaced gold. If we take a look at the price of platinum, currently about $1,000 per ounce, which is really where it was trading back in 2005, 2004. So it really hasn't gone anywhere over 20 years. By contrast, gold has been hitting new highs for many years now, and it's very far above its 2005 price. If we look at platinum priced in gold, we can see here too. Unfortunately, I was unable to make the chart go all the way back, but we can see that gold's been appreciated against platinum at least since 2018. And based on this chart, it's been doing it for a lot longer. In fact, this chart of platinum and gold, rather than showing platinum replacing gold, it looks a lot more like some fork of Bitcoin like Bcash going to zero against Bitcoin, or some other competitor, some other proof of work coin like Litecoin going to zero against Bitcoin. These charts look very similar. What shitcoiners and platinum apologists alike miss is that it's not just about the quote-unquote new tech, though of course platinum is old tech and has been around in the Earth's crust for as long as gold. But just to use the analogy here, what shitcoiners and platinum apologists missed is that it's not just about the new tech. There are also strong historical and cultural reasons why certain things persist as money. Once a culture locks onto gold, there are very strong network effects that prevent it from immediately flipping over to using platinum as money instead. In fact, we don't see platinum being used anywhere in the world as money. We see this regarding gold in places like India, which has strong cultural traditions surrounding using gold as a family's saving account, as jewelry, as a dowry, etc., and as a thing of beauty as well. Though, of course, the younger generations are much more interested in Bitcoin than gold, as we've seen in previous videos. Also, globally, there's been a long tradition of countries, rich people, central banks, etc., using gold as a store of value. This goes back for a very long time indeed. Much of this may be attributed to gold being found in almost every place on Earth historically, while platinum is perhaps not quite as evenly distributed globally. If you're enjoying this video so far, I just pause here to ask you to help to support the channel, help to support me with the YouTube algorithm. It really does help if you hit that subscribe button, leave a like, leave a comment, question, suggestion for a future video, and share this video with a friend or family member. So I think there's actually another reason why gold has been functioning as money rather than platinum, and it's this. It's because it's much more difficult to inflate the quote-unquote money supply of gold, in other words, to produce more new gold, bring it above ground, than it is to inflate the money supply of platinum, and this makes gold a better store of value than platinum. We can measure this using an old indicator that we used to talk about a lot on this channel called stock to flow. Stock is just the above ground inventories of a commodity. This is a traditional measurement that comes from the precious metals industry, but stock is above ground inventory, say of gold or platinum. Flow is the annual global production of that commodity. So if you take the ratio of these, it really tells you how much the current inventories are increasing percentage-wise versus what they have been the previous year. So if it's easy to mine a lot more of something over a short period of time, like platinum, for example, compared to gold, as we're going to see, it begins to look more and more like fiat, which can be produced on demand from the digital money printer. It's very, very easy for central bankers to mine fiat. They just print it up. So here's the relative stock to flows of metals, and I'm taking this from Plan B's famous stock to flow paper on Bitcoin. To be very clear, I don't support his models. They failed in the last cycle, and I haven't really been following him since then, but I think this is still a useful chart. It's a little bit outdated. As we can see, the prices here, gold was just at $1,300 an ounce when this happened. But here's the stock to flow right here under SF. So we have the stock, the above ground inventories for gold, silver, palladium, and platinum. We have the annual production or the flow. You divide the flow into stock, and you see that gold has the highest stock to flow of any of these metals by quite a bit. Silver comes in, so gold's at 62, silver comes in at 22, palladium at 1.1, and platinum at 0.4. So it's very easy. You can see here that the flow, when he last measured it, the flow of platinum was much higher by an order of magnitude than the existing inventories of platinum. So it's very easy to dilute the above ground stores of this. Commodities with a higher stock to flow make a better store of value and thus better money. This probably explains a lot about why platinum has never been used globally as money while gold has. And this is one reason that gold, and this is the main reason that gold has such a large market cap compared to the other precious metals, even compared to silver, which is down here at 1.7 trillion. So gold is about 10 times the market cap. It's because gold is trading with this monetary premium. It's still functioning to an extent as money. It's not just trading off its industrial value. Now let's take a look at Bitcoin stock to flow in order to compare it to gold and platinum. We currently have approximately 6 blocks per hour, block every 10 minutes on average, 24 hours per day, 365 days per year, and the block subsidy for miners is 3.125 Bitcoin per block. So this is basically how much is being mined every year. That's 164,250 new Bitcoin annually ever since the 2024 halving. So that's the flow. The stock is 19.761 million Bitcoin. And so if we divide the flow into the stock, we end up with 120. So this is quite an amazing conclusion, a result. Bitcoin stock to flow is now much greater than gold's. In fact, it's about twice gold's. If you want to know where I got the money supply from for Bitcoin, it's right here. The amount of them have been mined since 2009. I'll put a link to this in the description notes below so you can double check my work. Now, a side note here when it comes to monetary premiums and industrial usages of money, if your money has an industrial use like silver, gold, platinum, palladium, all do obviously, I think that's actually a bad thing if you also want to use it as money, since it allows fluctuating industrial demand rather than monetary demand. It allows fluctuating industrial demand for your metal to contaminate the market's pure pricing of it as money. It's very interesting to know what the price of money is, and if you have industrial demand contaminating the market, then you won't know. If you're using silver as money, for example, and all of a sudden there's a huge spike in industrial demand for silver because people want a lot of solar panels or something like this, that creates a pricing distortion in the value of your money, and you're no longer viewing a purely monetary asset. So the best form of money would have zero industrial usage and 100% monetary usage, and that's exactly what Bitcoin has, which is one reason it's the best money of all time. We can see here that for silver, most of the value of silver comes from industrial demand. So something like 85% of total demand is for industrial purposes, and then there is some monetary demand. In other words, demand for saving silver as a savings technology. Gold, by contrast, is mostly monetary premium, and I've said this many times on this channel. If the monetary demand for gold ever went to zero and disappeared completely, gold would go down 90% because 90% of its monetary, 90% of its current value is due to people valuing it as money. And again, that's why it trades at such a much higher market cap than either silver or platinum, even though I believe platinum is more scarce in the Earth's crust. So this is quite a paradox here, that gold would trade at over $2,600 an ounce while platinum is stuck at $1,000 an ounce or wherever it is. And it's because of this monetary premium. And then Bitcoin has no industrial use. Obviously, it's a purely monetary good. Bitcoin remains the best money ever discovered, and that's why it's eating the world, and everything is trending to zero against it, including other cryptos, bonds, equities, real estate, physical commodities, and even the king of commodities, which is gold, has been collapsing over the past 15 years against Bitcoin. As this chart moves down, that shows Bitcoin strengthening against gold. And this will happen forever, simply because a lot of that monetary premium is going to come out of gold and flow into Bitcoin, as it has already been happening. This is because a digital age demands a digital money that can be used for fast global settlement rather than putting shiny yellow rocks on ships and planes. This is a very primitive way of running a monetary base layer. And the only alternative, if you're going to be on a gold standard, to putting the physical metal on ships and planes is just trading gold IOUs back and forth, which is already the problem that led directly to the fiat age. There were many more IOUs than there was real gold. Bitcoin has the first mover advantage, the network effects, the portability, and the stock to flow advantages that will allow it to continue to demonetize both fiat and gold. So if you're constantly betting on the latest, greatest flavor of crypto or precious metals like silver or something, or even platinum, which is more of an industrial metal, and you're thinking that it's going to dethrone Bitcoin, you're going to end up really poor and frustrated instead. That's because when it comes to money, there really is no second best, and the best is Bitcoin. If you enjoyed this video, be sure to hit the subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video, and let me know your questions and comments in the comment section below. Thanks all for watching, and I'll see you in the next video.